morning, everyone. We are expecting a large crowd today. We've got a lot of good stuff going on. And just a quick, I just catch up with last month. Tiffany and I were at a T3 conference in Florida, and you know, a lot of the good things that they talked about was the fact that the market is going to stay pretty strong. We're still going to have the same problem that we've had probably for the past couple of years, lack of inventory. But one thing that was emphasized the most was the fact that technology is not going to replace us. It's going to enhance and make us more efficient. But the job of the realtor as a whole is not going to be replaced by avatars and robots, you know, because there was a lot of talk about that. The AI was one of the subjects of discussion. What's going to happen to the industry, considering a lot of real estate companies, the startup companies are thinking about AI, finding the house for you and so on. So with that being said, I think one of the things that I constantly emphasize is the power of videos, and whether you're sending out a 1-minute video to your clients on a monthly basis, or whether you do a video of your listing, do a professional video, it is very important. It has a lot more effect for your business than any other, I guess, still photography. And then having a profile on your website. A lot of you guys, I go online from time to time. We have new agents joining us to check to see who they are. A lot of times I don't see a picture, I don't see any profile, and in some rare occasion, I don't really see even a contact number. So after this meeting, I encourage all of you guys, go and Google yourself and see how you come up. Are you actually showing up? And if so, where are you showing up? And do you have a profile, a little information about who you are and so on. So I know we have a full program today, so I'm going to hand it over to Tiffany. I think she's going to continue, and I'm going to be listening.
Thank you so much, Hadi. I appreciate that. Wanted to let you guys know that we're going to have a kvCORE update next. Anna is going to speak, as well as Lee Allen, to share some insights. He has been testing the site along with some other of you agents out there. Then we will have Karusha's market update, followed by a special presentation from Listing Alert's CEO. And after that, we'll ask for you guys to vote and provide some feedback. And then we'll update you on OpCity and some other things that are going on, including our company cookout that I hope you guys are all aware of June 2nd. So I'm going to turn it over to Anna and to Lee, and I hope that you guys have a great morning.
Thank you, Tiffany. So real quick, we're going to talk about kvCORE for a second here, specifically about the Core Present. Let me share my screen here. So as most of you know, we have been promoting kvCORE like crazy. We are extremely excited about it. So this is what kvCORE looks like. And as I mentioned, we're going to talk specifically about Core Present. If you're following me on my screen here on the left side, you'll see this marketing tab, and at the bottom here, Core Present. So this is super cool. This is something that not all agents get access to, even when they purchase their own individual account with kvCORE. This is something exclusively available to all RE/MAX agents. And it is a CMA builder. It is a listing presentation builder, all of that. It is fantastic. So, Tiffany, do we have Lee on yet?
It doesn't look like he's on yet.
Okay. Yes, he is joining. He had a problem with the link, so he should be here momentarily.
Okay, awesome. Well, I will wait for him and talk through. So essentially what Core Present does is once you get a contact that comes into your system, what you can do with them is, if I click on one here, you can click Core Present and it'll come up, pull in the information based on the listing that they were interested in, and it will build out a CMA for you. create a presentation that is interactive, and it'll give you the option to present and share. So if it can't pull in the address information, you'll go ahead and fill it out yourself, and then it'll go ahead and create that presentation for you. It pulls in from MLS IDs. That way, once the client clicks through the presentation, it will show them basically the other available listings in the area nearby, what they have been priced at, how long they've been on the market for, all of that good stuff. So this tool is something that we've never had before with RE/MAX, and this is a fantastic tool. We've vetted it. A bunch of our agents have seen it already, and it is something that you guys really are paying for with RE/MAX dues. So it's something that we want you to take advantage of amongst all of the other great things within kvCORE itself. So I'll go ahead and pull up an example. Here we go. So this is one that Lee had created. He sent it to me as a PDF. You can see that it's branded up here as the RE/MAX collection that is luxury. So you have the option to brand it however you want, whether that's the RE/MAX luxury collection option, whether it's regular RE/MAX. There's also an option for a more modern look as well. So the one that we're looking at is just specific to luxury listings. So it has a different font, a different feel, looks a little more luxurious. And if you scroll down here, we can see Lee.
That picture's not designed to help sell it, right? It's not.
That's a great picture. Lee, do you want to take over here? Do you have the live link?
Yeah, so I actually have the live link. And so, guys, what I was going to tell you, everybody, this can be done two different ways. And you can just leave the PDF up because it's so dynamic. It'll be all right, and we can just walk through it. The idea is it generates two files. One's if anybody's ever used RPR, this is RPR on steroids. And it actually creates a dynamic link. One of the things I found, I didn't even know this, is if you email the document to the client, it literally tracks how long they stayed on what page. So the idea is you can go back as an agent, look at it real quick and go, dude, they spent all this time on this. So as Anna scrolls through this, if you want to, you can relatively just go fast like I talk, Anna. It's just fine. And oh yeah, here's the page. That's the analytics page right there. And it literally gave us a prompt question that says, hey, the suggested follow-up is because they stayed on closing and next steps. So you can see that they looked at this, they looked at that, they looked at this, they looked at that. They spent about 2 minutes looking over the whole thing. They viewed all 15 slides. This is dynamic. So if any of you guys have ever done this, I don't know if any of you guys have done this. I've created this. We've had the initial conversation, and then it goes cold for 3 weeks because they've got to do this, do this, do this, do this, do this. You can go back in and say, update. It goes out, it grabs all the new updated data, it brings the stuff back to you, it gives you brand new stuff. I think this is designed to be true marketing, which is to move folks from one step to the next. It's not designed to close the deal. That's what your professional is about. It creates great questions. And so it's just an absolutely fantastic document. What's great about this is keep scrolling. It literally is selling who we are, what we are. It's literally just designed to give more input. And this is just one of the multitude of ways. If you will, Anna, scroll all the way down. I'll tell you when we stop. It's okay. That's the very last page. One of the things, if you send this dynamically to them, it actually gives you, there's 5 prompts over on the far right-hand side that'll say, I need more time because I'm not really happy because I was expecting to get more price. I was expecting this. I was expecting that. All it does is set you up to be able to have an intellectual conversation with the client. It's the best thing. One of the really best slides in this is come back maybe about 3 more slides, Anna. Here we go. This is it. I swear to God, I got a little giddy on this because this looks across, and I'm not sure where it's grabbing the data, maybe Tiffany knows, but it literally looks and says, hey, you've got buyers built with this criteria in our system, and it looks and says, hey, actually, I have buyers. Now, when it says it doesn't mean Lee Allen does. It means in a combination with Tiffany and Anna and everybody else, we have buyer interest. I do love the fact, y'all, it includes an AOL address. So there you go. But this is really just designed to move folks along the step. I think it's a great email to send dynamically before you even have an engagement, because you could say the conversation. I told Tiffany this last night. You could say, hey guys, real quick, I'm just going to send you a top level analysis, very much like an automated value measurement. Realize it hasn't been in the house like I haven't been in the house, but this is going to give us a good starting point to have some great conversation. Is that okay? And they'll say yes. There, off we go. And it's literally going to walk into, it is so much better than the RPR stuff. So just really great. It does give you some stuff like shelf life. It gives you some definitions. So it's going to walk you through and hopefully create more questions. So I'll stop with that. Thanks guys so much. It's really a good tool. Use it, play with it, use it on your own listing and use it, send it to yourself, create yourself a test person. Do it on one of your own listings. I will say that Anna and I were having a conversation. I know you guys never do this. And while we were having the conversation, I went and built this. It was like 3 minutes. It's that easy. So
you are
right?
right. It takes all of 2 to 3 minutes to create this dynamic, and you can create multiple different versions. It can be a standard version. It can be a luxury. It can be a modern version. You can actually upload your own slides and information to this. And Lee is right. It does not take much time. I suggest we all check this out. We're going to have some training sessions on it. Just wanted to give you a sneak peek. kvCORE will be rolled out sometime later in June. We're still working with our beta testers to iron out things and make sure we provide you guys with the best product. Next up is Karush with his incredible market update. Welcome, Karush.
Thank you. Well, 1 second. I need to share my slides. Okay, there's a lot of technology going on. Good morning, everyone. So first, I got to make sure that we got the sound and audio, everything good. Tiffany, can you confirm if you can hear me well?
I can hear you well.
We're all good? Okay, we're going to go ahead and get started. You guys are not going to see everybody on the Zoom, so I've got the big screen here. Today we have a lot to talk about. As Tiffany mentioned, I want to talk to you about some of the products that we're thinking about launching. So I've got a condensed version of what I usually do instead of getting into every market specifically and talk about inventory level in every one of our offices. I want to take a kind of broader view of what's happening in the real estate market and what we are hearing mostly on the economy, how it's impacting real estate market. A lot of us, we're seeing headlines that is about economy, recession, real estate. And what I want to encourage everyone, I talked about this last month, read the news. I'm not saying don't read the news, but make sure that you have more than one source and do a little bit more digging, because a lot of times you see the headlines and that's what the media is trying to do, is trying to put something in front of us that is catchy, but there's always more to it than what we see. The inflation is definitely calming down compared to where we were. You know, when you look at what happened in this country,
Bruce,
last time we had inflation
screen.
close to 10%, it was in the 70s. So it was something that needed to be addressed. One of the most dangerous things for any economy, any society, is the high inflation. So it's something that needed to be addressed, and I think we're in the way to get it under control. But look at what is happening when we had this the high inflations, how the government and Fed has reacted to the rates. And so this chart, you look at 1980 is the last time that we had such a huge increase in the base rate with the Feds. In fact, in one meeting in 1980, they increased the base rate by 4%. And so that's when we had inflation close to 14%, 15% inflation. It actually got to almost 20% by end of 1980. And what happened after that? We had the recession. Right after, in 1981, we had the recession for 2 years because there were some steep measures they had to be taken at that time to control that inflation. So we're almost at the same point. You know, this is what the Fed has done. They increased their rates by 5% in 10 meetings. In the last 10 meetings that the Fed has had, we've had between 25 basis points to 75 basis point increase. And they're trying to control this inflation. But I was just going to show you the historical changes on that in the rates and what has been done over the years when we had those periods of high inflations. But what we need to focus on a little bit more is the job markets, because that is going to determine where the Fed is going to stop or they're going to continue the rate hikes. The labor markets are pretty strong. I mean, you're looking at the job reports that came out for April, 235,000 jobs added in April, and it pushed down the employment 3.4%. And this is the lowest level of employment we had since 1969. This is the number the Fed is looking at. Look at the job gains, very strong. You know, despite what we are hearing every day in the markets. Look at North Carolina, South Carolina, 6%, 4% job gains. And this is a 3-year period. You know, this side of the country, we see on the east side and in the south, we're seeing higher growth in job. And this is why our markets are really strong. We're not really trending with what's happening in California and some of the other markets, you know, because we have strong job markets. People are still moving here. Oops. Obviously, what is happening in the job world has created the best environment for the kids that are graduating this year. And anybody that is graduating from college, now they're getting their first jobs at $60,000 a year, $70,000 a year, and they're going to save money very quickly. This new generation will be your new home buyers. And so they're entering one of the best job markets in this country in 70 years. But hiring is in a cyclical sector is slowing down. So while we're seeing that the job reports came out very strong, yes, we added 235,000 jobs. This is what I was telling you about the news. If you get a little bit more detail and see what's happening, most of the jobs that are now being added, those 30% of those jobs were in education and healthcare, and you can see the breakdown. So in some of the sectors like administration, we are actually reducing the workforce. And you can definitely transportation and warehouse. On this other chart here on the right side, it shows how many jobs were added since February of 2020. We added a ton of jobs in the logistics sector because of that pent-up demand in logistics and transportation. That's the sector is going to have the biggest impact. I think we're going to have a lot of layoffs with shipping companies, logistic companies, because now the economy is slowing down. So you can see that this is the true reflection of what's happening in the job market. So yes, while jobs are available, they're not all in the same industry. And it's definitely favoring education and healthcare more than others. The job openings are falling down slowly. So as we see, still a lot of jobs open in the market, but they're slowly going down. And what we are really trying to watch out for, what the Fed is looking at, is the wage growth, right? Full disclosure, because I have some of the staff members looking at this right now. This is not in North Carolina or South Carolina, okay? Full disclosure. But the problem that we have right now, I think if you guys want to know, is the Fed is going to stop at some point. They have to watch out for this number. They need to look at the wage growth, and when that stops, then their job is done. If you're seeing about 8%, 7% wage growth in the economy, you are not going to be able to bring the inflation down to 2%. Because if employers have to pay 8% more, what do you think is going to happen, right? If my cost of running the businesses is growing by 8% every year, I'm going to have to add that cost to my finished product that is getting in the market. So the only way that they can control this is to look at this bottom line and figure out at what point we can stabilize the job market. I mean, I know that there were some conversations about, you know, people calling CEOs and asking CEOs not to offer more salaries. Well, the reality is you have to look at the job market, right? If the job market is strong, owners and CEOs, they have to offer more to attract the best talent. Okay, so yeah, this is what's happening. Again, if you think about it, we're still seeing in April of 2023, the wage growth still pretty strong. This is, by the way, it's just 1 month. So you can see that monthly, these wages are going up. And until that stops, the Fed's job is not done. But at the same time, what has been done already, the 5% basis point, is tightening the credit. And this graph is showing you what has happened historically, in 2008, when the market kind of crashed and bottomed up, we had a lot of tightness in the credit market. And we had that same situation here when we experienced a recession during the COVID. And now it's going back up again. The banks are now a little bit more pickier about who they want to lend money, and they're considering a lot of factors. What I want to talk about today is mostly about what are we seeing on the news? How do we translate that? How do we explain that to our consumers? This was on Inman News yesterday. Another big title. Banks are going to be in trouble, right? We heard that like a month ago. Banks are basically going under. There's a bank run situation going on. World is coming to an end. What he's talking about, Jamie Dimon is one of the most, successful people, also smartest people in the industry, in the banking. But he's made a lot of comments in the past 2 years. They all made the headlines. There's a hurricane coming. Economy is going down. I mean, when you read, he's got a good concern about what's happening about commercial real estate. The point he's talking about is a lot of these smaller banks, he says some banks, he's not talking about large institutions, talking about smaller banks, they are going to be in trouble with the commercial real estate maturing in the next couple of years. So this is something that for a lot of our folks that they do commercial, just to pay attention to this part. So as you can see, the first two graphs is showing about $1.7 trillion of commercial real estate that is being financed, a mortgage. The big banks have about 30% of all those loans, but that is only 4% of their portfolio. So the big banks are safe because that's a very small portion of the portfolio. So if the commercial real estate market crashes, which is not going to happen, it's going to be slow. But even in the worst case scenario, these big banks are not going to suffer because of a small portion of it. Where the issue is getting attention right now is the smaller community banks. Smaller community banks, they have more invested in commercial real estate. And you can see in this case for assets between 1 billion to 10 billion, it's almost 20% of their portfolio. So whatever happened to the commercial real estate in the next 2 years may impact those smaller banks. Hence, we're going to see more mergers, probably acquisitions, these groups getting together. That is what is part of the market in a commercial, in a cycle. And I think it's going to open up a lot of opportunity for investors, for people to buy commercial real estate. And probably in the 10 years, the billionaires in this world, a lot of them, they're going to have a lot of commercial real estate that they bought in today's world, in today's market in the next 2 years. There's going to be great opportunities. Office space is the main topic of the conversation. You can see the commercial borrowing has declined already about 40% this year. And we have close to $750 billion in commercial loans maturing in the next 2 years. That's what Jamie is talking about. That's what JP Morgan is talking about. That we have all these loans are going to mature in the next 2 years. And with the higher interest rate, some of these owners are going to have a tough time to be able to justify the cap rates, to be able to justify keeping those properties as income generated properties. Office and hospitality, almost 30% of all these commercial properties out there. Again, what's important to pay attention to as we are seeing the credit is getting tight, how is that impacting us in the residential market? Look at this graph. The consumer, I mean, the blue one is what happened last year, and the gray chart represents 2023. And you can see on the consumer side, all the loans have been down from 81 billion to 54 billion, but look at residential. It's almost the same. Look at the change of what's happening in the commercial real estate, industrial versus residential. That talks about how strong residential real estate is. Even though we went and added 5% to the base on the interest rate, still investment on the residential is pretty steady and strong. Right? This is the message we want to take out. Absolutely, it's going to have some impact, but real estate, residential real estate is still steady and pretty strong. So again, when you see these articles, pay attention, there's more to it, right? We also saw last week, there was a lot of conversation about these stores are going out of business. retailers, right? Bed Bath and Beyond, Davis Bridal, Tuesday Morning, Party City, right? We're all paying attention to what's happening. Is this going to be another 2009, 2008? No, the reality is, again, looking at these numbers, yes, it was announced that we're going to have over 2,500 stores closing, but at the same period, we're adding another 2,700 stores. So there are new stores opening up, there are stores closing. And look, even in 2022, we had over 765 retailers that they closed their doors. It's part of the market. DoubleTree just announced last week that they're going to add 650 stores, right? So in the same market as we are hearing about these doom and glooms, there are some businesses that are saying that we're going to add more stores. We're going to leverage this economy. Now, Dollar Tree is one of those businesses that I like to call it counter-cyclical. So every time the economy is slowing down, these businesses are going to do better. But at the end of the day, there's jobs, there's opportunities. It shows that the economy is still strong. But let's bring it to the residential real estate. So April overall, when you look at the number of closed sales and number of pending transactions, those numbers were not as good as what we experienced in February and March. So the total transactions for the year were adjusted down from 4.5 million to 4.28 million. Still better than what Freddie and Fannie and NAR expected at December, at the end of last year. They thought it was going to be closer to 4 million homes. The foot traffic was down 10% nationwide. But again, look at the South. We are getting the least amount of impact as far as all these changes, right? The foot traffic was 6% down versus, looking at Midwest, 14% or 18% Northeast. Existing home sales. This is kind of a depressing chart. However, it shows you there's light at the end of the tunnel. So when you look at, these are the number of existing home sales that started going down. I think you guys all agree that the first quarter of 2022 was great. We were still going full steam ahead. And then things started changing in the second quarter. And it shows that the numbers started coming down and kind of bottomed in November of 2022. We were 35% down. And we're still down if you compare it to 2022, 2021, but it's getting better. Slowly, it's coming back up. So we're still, I mean, you think about the overall housing market in the country, we're still closing 23% less transactions than the year before. First-time home buyers, 29% of all the transactions. Look at the cash sales, 28%. Almost 1/3 of every transaction is happening cash deals, while you're hearing about a lot of cash offers in the market. And 3.1. So properties are getting multiple offers. And that's not just in our market. The inventory is not there. So most homes are receiving more than one offer. And 33% of properties list over list price. Again, these are the numbers we have to pay attention. Real estate is still strong. We're not doing the same number of transactions, but we're not seeing price depreciation. We're not seeing troubled assets. What we're seeing in the market is still very strong. This is what I was talking about earlier. So we were started at 4 million. The forecast was adjusted to 4.5, and now it's 4.2. And I think it's going to be adjusted again. This is something that by July, we're going to have another meeting. I expect to see this number somewhere close to 4.6 to 4.7 million by the end of the year. So this is going to be adjusted. Here's what Realtor.com published, just showing basically where we are as of April. So the forecast is showing that we're down month to month about 3%, in year to date 23%. Very similar to the numbers that you looked at from NAR. And it's showing you historical where we started. In 2019, our existing home sales were about 5.3 million. So if we're going to close the year for about 4.6, 4.5, it's not a huge drop in the business. We are all going to feel it, but it's not like the business is going down by 50%. Sales prices. Another article that we're seeing that the sales prices are finally cooling down. They're coming down. You got to look at every market. In some markets, yes, the prices are coming down in the West, but look, Northeast, Midwest, and South, they're seeing price appreciation. Our prices are not going down. Here's a good stat to know. Mortgage homes with greater than 50% equity. Look at that, 28.90, almost 29% of Americans, they have more than 50% equity in their homes. Do you think they're gonna walk? No. That's why we always say we're not going to have a repeat of 2008. The foreclosures are not gonna be part of the market. Almost 39% of all Americans own their homes with no mortgage, debt-free. So these are all good indications, and part of the reason why we have inventory shortage. People don't have to sell; they're sitting on cash-rich equities. Inventory existing homes is low. That is the challenge of the market. You heard Hadi earlier talking about it. That is the number one issue right now in our business. We don't have enough homes to sell, but new construction is picking up, and the new home sales are almost back. You know, we kind of peaked as far as the demand for new homes right after COVID, but right now it's almost back at what we had in 2019 and 2018. So that business, I'll say the new construction, you may hear that, well, there's the builder confidence is not there. You know, the builders are having issues. They're not building as much. I think that business has already been normalized. It's actually stable. You don't want to see the spikes in that trend. Coming back again to the inventory. We're doing slightly better than we did in 2021, but look, our inventory level is still a lot less than what we had in 2020 and 2019. That is the issue. And the problem is no one is selling. People are enjoying this 4%, 5% interest rates. And I think more than anything else is a mental barrier. Obviously, financial is important, but to go from a 4%, 5% interest rate to 6%, 7% interest rate, it's making a lot of people think. And also, you know, we're all in real estate. Some of these transactions happens because of live events, right? And now, because of the expenses, because the homes are unaffordable, it's putting some of those live events on pause. You know, it's funny. I was talking to Tiffany, and she shared from the convention. There was a talk that they're saying that a lot of people filed for divorce earlier, but then they realized they like their rates better. Like, hold off, right? Because now you're going to have to go to a very, very high much interest rate. And look, another reason that people are thinking about staying longer in their homes and not selling is the kids are coming back, right? It's a trend that we are in the real estate business, and this was a part of our business that people have kids out of the house. Now they don't need the same square footage. Let's put the house in the market, right? Those life event changes are not part of the business as much as they used to be 5 years ago, 10 years ago. Now, kids are moving back, staying with their parents. They need more square footage. So where am I going to go? I don't have the same motivations that I had maybe 5 years ago to sell. So that's why we have a combination of reasons, but I would say the two big factors that we're not seeing inventory in the market, number one is rates, and number two is the change of these life events and how we live as a society today, a little bit different. We do have a mild recession that is going to be talked about. This is something that I can't sugarcoat it. You know, officially, when you see the GDP is going down, the rates are that high, we're going to experience that mild recession. But we talked about it. How is that going to impact our business? We all went through that recession during COVID. And yet we had one of the best years, you know, 2020 and 2021, best years, record-breaking years in real estate. So recession doesn't mean necessarily bad news for real estate, but that's something that is coming. It is being created artificially to stop this inflation. I want to know how many of you agree with this quote on the screen. During a traditional recession, the Fed will usually lower interest rates. This creates an incentive for people to spend money and stimulate the economy. It's also typically leads to more affordable mortgage rates, which lead to more opportunities for home buyers. Would you agree with that? A lot of you have been in cycles, more than one, to experience that when we go through that recession, there's usually incentives because they want to bring that economy back. So the first thing that I think is going to happen is once we are officially there at the bottom, we're going to have some adjustments on the rates. We're going to see some drops in interest rates. And here's a graph to support that. A recession means falling mortgage rates. Look at what happened. 1980, we talked about that. We increased the interest rate by 5%, 4% in one Fed meeting. And then immediately after that, we had a recession. So they had to drop the rates by 4%. 1980, 81, they brought the rates down. The recession continued. It was a 2-year period. 1991, another recession. They brought the rates down by 2%. And the most recent one, 2008, right after that, we had rate drop, right? Rates came down by 1%. And in 2020, we all remember that. Rates came down. The rates were hovering about 4%. They came down to about 3.5% right after COVID. So here's what NAR is forecasting for the interest rates. That by next year, we're going to be at least 1% below the rates that we have in the market, right? And that doesn't necessarily means that we're going to have less credit in the market. We're just talking about the Fed is going to adjust the base. So the rest of it is on the mortgage world and number of applications. So the rates could be hovering around 5% by next year. Quick pros and cons when you're working with a buyer in a market that is essentially in recession. There's less competition, lower prices, lower rates, but the cons are, stricter lending requirements, obviously, and fewer options available, and some economic uncertainties. So there's always pros and cons in every market. Quick stats on the realtor business in the realtor world. I found this really interesting. I don't follow the real estate venture group, but sometimes I look at their posts on Twitter, and this one got my attention. And it shows about the realtor, I guess the growth in the number of realtors in the United States. And for the first time, we're actually seeing that it's going down. So realtors are leaving business for the first time in a long time, as you can see. So the last time we had a lot of people exiting the industry, it was right after the big crash, right? And now after, 13 years, for the first time, we see that this membership is coming down. And the other chart that I even like that better is how this chart is actually moving along with the property valuation. So as you see the home prices growing up, there's more people getting in the market, and the home prices are stabilizing, coming down, and there's realtors leaving the business. So we're going to see a lot of people leaving the industry in the probably next 6 months, 12 months, right? My final thoughts, there is no boogeyman, okay? So we went over all of this because I think sometimes we read all these articles and we're also like expecting that, okay, this one is going to get everybody down. This one is going to be the major one, the bank run, or, the mortgage rates. Now, the commercial real estate, really, the reality is, I don't know, how many Beatle fans are here? Anybody likes Beatles here? Everything will be okay at the end. And if it's not okay, it's not the end. We're going to do fine. We went through some of the worst periods of the history in the world. Okay, 2 years that everything was shut down. We came out strong. We're going to be fine. I just want to encourage all you guys to be cognizant of the fact that the media is putting a lot of negativity out there. And my job is just to bring that information. I read the articles, but I don't stop there. I try to dig in and find more. So when you talk to your buyers and sellers, talk to them about real estate, how strong this business is, what is happening in the South versus the rest of the country, right? Why this market is different. Educating the customers, this is our number one job. And I'm going to continue bringing that information to you. Hopefully in the next meeting, we'll have a deeper dive into the local stats and numbers. But again, our goal is to bring you some resources, valuable information, so you can educate the consumer, because that is the number one goal. That's the number one role of the real estate agent today. We're not going to find homes, we're advisors.
Thank you so much, Karush. Greatly appreciate Karush's market update. As always, lots of incredible information. If you didn't notice the chat, we will be sharing all of Karush's slides in JPEG as well as PDF format later today. So check your emails for a link. He is going to share that momentarily with us so we can get it out there to you so you can see the slides and use them in your day-to-day business. Up next, I am pleased to present Linda Yakub, who is the CEO of Listing Alert. It's a great program that we wanted to bring to you and let her pitch directly. And then afterwards, we're going to have some discussion and some voting on whether you think it is the right component for our company to go forward with. We wanted to hear your advice and your suggestions, and this allows us to provide exclusive listings and buyer opportunities locally within our company in a private environment. So that's why we invited them. We thought it would be a great benefit to you guys to be able to share listings and share buyer needs in a better format than what we do today. So Linda, please take it away. We're so happy to have you and your team here.
Tiffany, good morning. I'm actually going to go ahead and jump in here for everybody. Linda is on the call. Thank you, Tiffany. Thank you, leadership, for having us on the call this morning. Some great faces out there. I know that was a lot of information, a lot of great information. So we can grab a lot of that information, and hopefully it helps you guys in your guys' businesses. I'm not going to take up too much of your time. We're going to try to keep it under 15 minutes here. A quick introduction to our team. Some of us are scattered throughout the call. My name is Mauricio Cifuentes. I'm a business development manager with Listing Alert. We have a couple other folks from our sales team. Justin Cox is on the call. Matthew Brock is on the call. We have our leadership also. So Linda Yakub is on the call. She's our CEO. We got Rachel Cahill, who is our sales manager. And then we have, I believe, Katrina and Michelle Talley are also on the call, all part of the team, all part of folks that you'll be able to have contact with if we can move forward with this partnership, which we're really looking forward to. Really quick, let me start off just quick background on what Listing Alert is and where it started. Listing Alert came about during COVID, like a lot of things. People had great ideas during the time, and it was brought to market. It started with a practicing real estate agent. As many of you know, we weren't in the office, and she said, wait a second, I'm missing something, and that's access to properties that are coming to market. Most of us know that as a whiteboard concept. Some of us use a Facebook group, a WhatsApp message, or even an email. In her particular office, they had these on a whiteboard. Well, nobody coming into the office, that all of a sudden was out the door. So she had the bright idea of creating a digital whiteboard, and that's where Listing Alert started. She wanted to make sure that she wasn't missing any opportunities for properties that were coming to market. She brought the idea to our parent company, which is Bitwise Industries, and we developed it a little bit more. Linda came on board, and it is where it is now, and I'm excited about where it's going to go. So, like I said, it was an idea to get agents, in this case, listing agents, to try to figure out what properties were out there. And that's where Listing Alert started. It started out as a digital whiteboard, and a listing agent can put in their pre-market listings into our app. Very simple. We kept it very, very simple. You're going to enter just information, and you're going to see a demo in about a couple minutes of what that actually looks like. But you'll get to enter information. Everybody within your organization is going to get a push notification on their phone. So this allows anybody within RE/MAX Executive to see any property that's coming to market, whether that's in 2 days or however it may be. And you'll get an idea to figure, wait, you know what? I have a buyer that might be interested in this property. That's the second part of our application, is the buyer side. So as a buyer's agent, you can come into our application, enter your buyer's wants and needs, which right now in today's market, I believe is very, very important. You can go ahead and enter that information, and we're going to match make on the back end. So I like to sometimes refer to Listing Alert as matchmaking for real estate. We're in a sense a dating app, right? So one person enters their what they offer, another person is entering what they need, and then we'll try to match make. The app itself is going to go ahead and connect those two people. If there's a match, you'll be able to see that there's a match. It's going to provide you with the information of that agent. You can either call them, you can email them. The whole point of Listing Alert is to help communicate agents when they may or may not be in the office. This naturally is going to lead to deals, right? At the end of the day, that's all we're trying to accomplish, is see if we can get more deals done. Well, very, very, very simple process. Some of the value that we're providing to agents and what we're seeing across the country as we continue to grow is we're seeing agents win more listings. They're using our tool, our platform, as a marketing tool. You know, when they're visiting with their sellers, they're able to tell them, hey, look, I have a pool of buyers already within my office ready to go. As a buyer's agent, you're able to go to your buyer and say, look, I have access to some pre-market listings. Let's take a look at that. Let's see if that's something we can access before anything hits the market, right? So it's really providing another tool for you guys to expand your business, to grow the business, and really stand out in a market where for a while there, it was very saturated with agents. This is going to give you guys an opportunity to stand out and really bring your business to the next level. We're also helping increase per agent transaction. So we're seeing a lot of brokerages, their transaction volume go, through the roof. I'm not saying that it's only us, but we are an aid to that. And that's all we want to be, is an aid to what you are already successful business. Let me see, I had some notes because I didn't want to miss anything. But in a nutshell, that's it. Very simple. It's a way to communicate with agents when they're not in the office. We are a pre-market, so anything that hasn't come to the market yet, that's what you would be entering in our system. Everybody will be notified with the push notification on their phone. We're all on our phones. We all do business on our phones now. So you'll see that message come through that a new property was added. You'll be able to see the details on that property. There's a lot of great things in our roadmap coming up that I would love to share with you all as we go. What I want to do now is, a lot of us are visual learners, myself included. I'm going to invite Michelle Talley to jump on the call. She's going to actually demo the application for you in the platform so you guys can see how simple it is. And then, if there are any questions, we would love to take them and get them answered before we're all off on the call today. Again, Tiffany, leadership, thank you again. And I'll go ahead and pass it over to Michelle.
Good morning, everyone, and thank you for joining this listing alert demo. First, I'm just going to walk through the functionality and features of the app, and I'll then highlight how it will help you streamline, standardize, and improve your productivity. Just a quick note, I'm also a licensed real estate agent, so I understand time is of the essence, and you only want to use tools that make your life easier and more profitable. So I recognized immediately that listing alert was something that our industry really needed. Let me go ahead and get started with the demo. Okay, everything about our app is very easy to use and intuitive. You could figure this out pretty much without any guidance, and we really want to keep it that way. If you look at the app, there's only 5 tabs that run along the bottom: the home, the buyers, add listing, my listing, and more. The home screen is really that digital version of the physical whiteboard that was used in many real estate offices to share those pre-market, sometimes called pre-MLS or pocket listings or whisper listings. It's very easy to navigate. There's a lot of options to filter, search, and sort. You can see at the top. So I could actually push on these and put in the type of listing I'm looking for. I can put in a city or zip. I can sort from the date they're going to go live or price. So it's very, very easy to use. If you want to see this in a map view, you can click up here. You'll see the maps. I tried to pop in a few listings here for your area just to kind of give you an idea. You can click on the tab and it'll give you that detail. For the most part, when you're starting, I would say leave it on the list view and don't really do any filtering so that you can kind of scroll through. Anything that is my listing that I entered, it will show me if I have any matches up here in the corner. Just a note, I should have said this at the beginning. This is all pretty much fake information, and this is a demo screen. I did pop in a few listings for your area, but for the most part, it's not real information. When you see the little yellow home, it'll let you know when the agent wants this to drop off of this app, and because it's most likely going into the MLS. When I click on a listing, it's going to give me the details, that basic information about the property. And the part that's golden is this note section, because this is where you're going to communicate with the other agents in your office about that very important need to know information. It also helps if you get a lot of questions about the same thing over and over, like if they had a pool and everybody keeps texting you to say, Is it a saltwater pool or a chlorine pool? At some point, you just want to pop back in your listing, add that information to help cut down on some of those types of calls. Also, when I'm in here, the only option I have is to either email, call, or text the agent. When I click on that, it'll give you that option to call or text. So we make it very simple, very easy. This is also something that's good to share with your client because it lets them know that you operate in a very professional, concise way and that they can trust that their information is being handled appropriately. The next button, buyers. This is where the magic happens. Here's my buyer contact list. I see my client's information, but no one else can. If we had a match in the app, they would only see that ID code. For Ed Smith, it's 383D. That's all they're ever going to see. Agents enter their buyer information. They're the only ones that can do it, and no one else is ever going to see that information. Let's take a look at my buyer, Lisa. Where are you, Lisa? So once I go in here, I have her email address, her phone number. Putting the emails optional, but the note section again is where I'm going to put information that helps jog my memory about this contact. I was friends with her parents, they referred her to me, but she's leaving on vacation in July and she's not going to be available. Now, down here under this property search criteria is where you really want to build out this app. Because maybe you don't really enter a lot of pre-market listings, you still can have this app work for you in a way that you just put in these criteria searches, and then as other agents enter properties, the system or the app is going to match those up. So Lisa is looking for an Airbnb for her, an investment property, and there's the criteria that she built in, and her parents are downsizing. So there's the criteria that I would have built in for her, so that when these listings come in, it's going to find them and it's going to let me know automatically that there's a match, and it's going to let the listing agent also know that there's a match. I could also add another search criteria for her by hitting that button and then entering those details. I could put vacation home in Florida, bed, bath, all these details. So we're here to make this really easy for you. Save it, and then I'll have my list. Let me go back. We do have a list of active and inactive. That would be, for example, if I had a buyer that bought their first home and I know that they're really not going to be ready to buy another home for 5 years because they've told me that, or they have small kids, they want to graduate from that particular school, I'm not going to delete them. I'm just going to move them to inactive and then start following up with them over time and then possibly move them back to active status. The next is the ad listing, exactly what it says. You're going to enter basic property information. The asterisk reds are required fields. So you're going to input that information. We have a few preset amenities that you can select, but the really important thing here is this go live date. When do you want this to drop off the app because you know it's going to the MLS? And then over here again, these magical field notes that really give descriptors about the property and what you want other agents in your office to know, or if you're asking for advice on property. Because if you're a new agent, maybe you just want the team to help you and say, hey, am I pricing this in the right field? Or am I even describing it correctly? So it's a way to test the market before the listing goes live. The next one is my listing. So even though I saw my listings on the home page, this is a way for me to quickly pop in and see what I have going on. I can see if there's any matches right now. I can click into the property and see the details and see if I need to add anything. It's just a really good way for me to kind of manage my accounts. And then the last button is the more. This is just your profile information. It's going to be where you log out or change your password. And so that's pretty much the app in a nutshell. So I would say, think about it from your client's perspective. When you're using this, it makes them feel very VIP. It lets them know that you have the technology to showcase their property in a professional, equitable way. I remember a few years ago, Forbes posted an article that said why The Rock paid $28 million for a home sold through a pocket listing, and many others are too. So people are starting to understand that this is not just for the rich and famous. everyone's craving privacy, or they might have special circumstances where they do not want their listing to go out to the public. So make sure you're sharing this with your client and let them know that you have this inside track, whether you're trying to make them your client now or whether they're your client today. When you think about my client, Sarah, an agent I could just have built her profile, talk to her about how it works. And at the same time, an agent on a Sunday afternoon could be putting in a pre-market listing, hit save, and they get a notification that matches what Sarah's looking for, and I get a notification, and then we can talk right there. It's pretty impressive. You don't have to be a high pre-market listing agent. You can also just build out your buyer section very thoroughly, and then the app will do all this work for you behind the scenes. So again, it's a good place for agents to vet out these listings that they want to do. It's a good way to test the market. It's also very good for the brokerage. I know all of you, at least me too, when you're working with a property, it's a lot easier when you're working with an agent that's in your same brokerage, because I've gotten to a property, couldn't get in through the lockbox and couldn't get a hold of the agent. And I'm standing there with my client. Had it been somebody in my brokerage, I could have found somebody that could have let me know, oh, they had to leave for an emergency. Yes.
Michelle, thank you so much. That is about all we have time for. So
Okay,
that
well,
we get to our discussion. I really appreciate your feedback and the information you've shared today. I know Karush is going to do a quick review of this, and thank you all, the Listing Alert team, for joining us. I saw one question regarding pictures, and I saw another question as to whether it's only an app. Could you guys answer that real quick before you guys head out?
Pictures,
Yeah,
go ahead.
Absolutely. So pictures, that is currently something that we're going to be releasing in our next version of Listing Alert. I know it's been something that a lot of agents have been asking for. And as far as the phone app, yes, there is a mobile dashboard for brokers, but as far as for the agents, it's currently just a phone app.
Thank you so much, Mauricia. We appreciate it. And Karush, if you want to take it from there, we will let all the Listing Alert staff head out, and we appreciate your time today. Thank you so much.
Okay, thank you guys. I'm back with a 30-second pitch on this, okay? The reason that we thought this would be a valuable tool for you is because I see the number of emails distributed through Wolf Connect. This is one of the company platforms that is still operating on a DOS platform. Looks like it. It's pretty old, but I know you guys love it. I see emails distributed daily between offices. Somebody's asking for a certain vendor, or somebody's promoting their listing. This is a more modern version of that. So the reason we thought that this would be a great platform for us, so you heard about all the bells and whistles this platform has, but the number one goal was to bring you a platform that is easier to use. So when you have a listing coming soon, whether it's exclusive, you've got a much better platform to use it to broadcast it to the whole office region. And the second thing is, we don't have a good system to keep track of our buyer data, right? And if we all put that information in there, imagine how much information we all have as brokers to know that here is what people are looking for. And so you go to a listing appointment, or you know somebody that is interested, thinking about selling, you can say, hey, here's a temperature check on the market. In our company, we have about 200 buyers right now in this price point. They're looking for something like that. And we can get very specific. But there's a lot of technology platforms out there. So we thought we just bring this to you guys and see if you see benefit. And then I'll let Tiffany to go from here and figure out how we're going to roll this out, what the cost is. But I thought it's important to just do this quick recap after hearing them for 20 minutes. They did a good job, but I thought it would be just good to compare that with the platform we are currently using, which is Wolf Connect.
I want to let you know, if you're thinking of another lead source right now, OpCity may be an opportunity you'd like to look at. They do referral fees, and they have a good number of opportunities in a number of our markets, and their price point has gone up a good bit. And since we were noting that our agents that are using it are seeing $300,000, $400,000, $500,000, even $800,000, $900,000 opportunities, we want to bring it back out to you. So Angelica is going to reach out and share more information with all of you. But if you're interested in becoming an OpCity referral agent, please reach out to Angelica. Note our company cookout is going to be in the South Park office parking lot. We'll have the balloon. We're going to have burgers being flipped by Hadi, Karush, and I, and some special guests. We will have beer and ice cream, and it should be a lot of fun for you, anyone that you want to invite as well. So it's not just for you, it's for your family, it's for any of your clients that you'd like to invite. So please make sure that you are signing up and heading there next Friday at 12 o'clock. Look for other opportunities for our company update, kvCORE training in June. And then don't forget to mark your calendars for July 12th, which is our in-person and hybrid event for our mid-year company meeting. We will have some great special guests, including Nick Bailey, and we look forward to seeing you guys all there. Thank you so much for your time, and we look forward to reviewing the survey and getting back to you with the results here soon. Again, all the slides will be available from Karush's presentation soon. So please make sure that you're looking out for those today. And if you have any questions, please don't hesitate to let me know. And if you were in a watch party, if you could provide your stats to your admin so that we can get those poll results in. So what your thoughts were on, did you like the listing alert? And would $10 be a price that you think is reasonable per month for that service? Thank you guys. Have a great day.
Thank you, Tiffany.
Bye, guys.